Hi, David Bassanese here, Chief Economist at BetaShares, and this is a snapshot of my market trends report for the month of September. And the theme of the past few months continues, i.e. global equities up in an environment where bond yields remain fairly steady. Concerns with regard to an uptick in inflation are moderating. The markets and particularly the central banks do feel that the uptick in inflation that we've seen in some countries earlier this year is still largely supply chain related, and it's transitory. And as a result, central banks aren't bringing forward their policy tightening, and interest rates are remaining fairly contained. In terms of COVID, also, by our standards at least, death rates and rates of infection in the Northern Hemisphere still look quite high, but their vaccination rates are a lot higher than ours. Those that are, still getting affected by COVID, it's largely amongst those that remain unvaccinated. So there's no strong will politically to go back into lockdowns to deal with COVID in the way that countries did last year. So the growth outlook at this stage remains quite good, and we're seeing pretty good growth in corporate earnings continuing to come through as well. And so the MSCI Global market, for example, rose 2.6% in August after a 0.7% gain in July. It's up around about 15% in the past 6 months and about 30% over the past year. Our market also did pretty well in August, up 2.4% after a 1% gain in July. And actually our market's up by a similar amount to global markets over the past 6 and 12 months, so about 15 and 30%. Some of the themes globally, we're seeing the US market vis-a-vis other developed markets basically start to outperform again. It's been outperforming for most of this year. We're seeing emerging markets, by contrast, underperform since the start of the year, particularly given concerns in Asia with policy changes by the Chinese government. And also, I guess, generally, emerging markets are still lagging in terms of getting on top of COVID, and so that's holding back their markets relative to developed markets. We are also seeing so-called growth parts of the market, i.e. technology, consumer stocks, starting to outperform again versus value stocks, things like energy and financials. And the value parts of the market had a good period of outperformance midway through last year up until earlier this year. But with the moderation in bond yields over recent months, we're seeing the growth parts of the market start to outperform again. To the extent it's possible to foresee these things, I mean, the outlook does look fairly encouraging, provided that the inflation story remains fairly contained, and provided we don't see any new variants of COVID emerge that the current vaccines can't deal with easily. So if you'd like to see more details of my report, please visit the Insights section of our website. Thanks for watching, and I'll see you again next month.